Hi, friends, and welcome to tonight's weekend edition of Cliff's Notes. And I got to tell you, I am super excited for you to meet our special guest tonight, Dave Stech. You know, I had the chance to meet Dave down in Puerto Vallarta last February with my good friends Scott Lewis, Brent Gove, Rob Flick, and Gene Frederick, and about 600 other top producers from EXP. And I got to tell you, that meeting was life-changing. Tonight, you're going to find out from Dave as he unpacks what you need to know to create wealth during the next 6 months following this corona pandemonium that we're in right now. And you're going to hear it right here live on Cliff's Notes coming up next.
Real estate agents, are you struggling with the day-to-day grind, dialing for dollars, putting in hours of floor time with little to show for it? Are you looking for tips, tricks, and tactics to accelerate your career as an agent that will have you closing more homes, working with more clients, and earning more money than ever before? Hi, my name's Cliff Freeman, and I've spent the past 2 decades of my real estate career running one of the top brokerages in DFW and personally coaching over 1,000 high-performing real estate professionals across North America. I created this podcast to share the strategies and tactics you need to explode your real estate business. I guarantee it.
Yep. Well, the first thing I may have to do is turn in my man card because I just found out there was an NFL draft this week. I tell you what, I'm not kidding. I didn't know till right now. And I like watching football. You know, I'm more of a golf guy, but I'm an old rugby player, to tell you the truth. But here's the deal. I'm not watching the news. I'm not watching TV. I've never been so doggone busy in my life. The pandemic is pandemonium. I mean, if you're in it, look out. I'm doing 10, 15, 20 Zooms a day. We're putting buyers in escrow. My team is up there, and we're there. That's that beautiful Brent Gove team in Maui. And then we're helping sellers sell. We're helping buyers buy. My little team did 3,200 closings in the month of March, 3,293 to be exact. We are booming. Now, I admit I am a victim of Zig Ziglar. I have a positive mental attitude. And I realize I'm the guy who thinks the V is going to happen. There's not many people who believe that. I'm probably wrong. But still, I'm going to live in the V. I'm building as if we're going to explode June, July, August. I hope I'm right. There are many who think it's going to be a hockey stick, and it's going to be 2-3 years of hell. You decide. They may be right. I may be right. But I'll tell you this. I'm going to forecast right now. My forecast is we're going to rock this summer. Many would say I'm irresponsible. And I could definitely be wrong, but I'm going to keep my mentally tough, positive, strong attitude. I'm going to apply massive action, and I'm going to be scrappy. I'm going to hustle. I'm doing hand-to-hand combat. And I tell you what, I'm getting creative. And I'm telling you what, look out, babe. Smile and dial. And if I'm wrong, oh well, but I don't think my attitude is going to hurt me. Now prepare. Expect the best. Prepare for the worst. Expect the best, but prepare for things to go that way. So that's me. I'm not saying everyone's going to be that way, but I'm fired up.
You talk about being on Zooms this week. Mm-hmm. I've never been on this many Zooms in my life.
No.
We were on Zooms before Zoom was hot, just so everybody on this call knows. We discovered Zooms years ago. What you're saying, Brent, is this, though. Everybody on this call should write this down. Hey, do me a favor if you could. Everybody that's listening right now, grab a pen, grab a piece of paper, and write this down. I choose not to participate in the downturn. Now, I want you to write it down, seriously. So what Brent's saying is, it's just I choose not to participate in this downturn. There's 26.5 million people filed for unemployment in 5 weeks. I'm a realist. I know what's going to happen. But when you write those words down that I choose not to participate, what you're saying is, I'm going to go. I'm going to figure out how to sell properties in this market. Thank you. Thank you, Scotty, for writing it down. Because it's that simple. What Brent was saying is, it's not Zig Ziglar being, fluffy and not being a realist. It's like, you know what? I just choose not to participate. Guys, in the 80s, When we lost in Texas, in Oklahoma, and Arkansas, half the realtors in 3 years, that's when I got in this business. The reason I can tell you, I chose not to participate. So when I said I choose not to participate, I didn't get out of the business. I didn't run away. I said, how am I going to sell property here? I got news for you. Like you, Brent, I've got people right now going, Gene, you shouldn't see how I showed this property. It's unbelievable. I didn't show it. I had the next door neighbor show it because they won't let me go in. I mean, doesn't it bother all of you guys? Tell me if it does not bother you when our state tells us we're not a necessity or whatever they call it, that we shouldn't be selling homes this. I mean, realtors are going to figure this sucker out.
Just like you guys, I've had more Zoom calls than ever before. What's interesting is that I'm starting to get Zoom calls that are not just individual agents. It's more brokerages now that I'm having Zoom calls with than ever before. I think last year we moved over 80 offices from other companies to EXP, including just recently one of almost 900 agents as well. So offices from the size of 10 or 12 to 900 now is not surprising. I'm talking with another company right now with 900 agents who is just trying to see how it can fit in for his people. He's looking at what does the transition look like. I never used to have these kind of conversations with people that had hundreds and hundreds of realtors. And so I would say don't be afraid of talking to that. I believe we're going to probably have 2 times the amount of offices convert as we did last year. Wouldn't surprise me that we do over 200 office, fold-ins. Very, very positive about that. I can tell you that I don't want to talk very much today because I really want to get to Dave. But I will tell you, it's really interesting. One of the thoughts that I had earlier today was we're becoming more and more virtual. We're becoming a virtual world like never before. That this whole pandemic is forced us to start, as you said earlier, to expand into other markets, expand into other spheres of influence, and expand into other levels of people, if you will. And we're having virtual meetings. We're having virtual home tours. We're having virtual closings. We're having virtual phone calls. We're having virtual happy hours. I'm surprised they don't call them happy days, but anyway, virtual happy hours. We're having virtual birthday parties. I even saw a virtual wedding. I mean, it's incredible what people are doing to adjust to what's happening. And it's a funny thing, EXP has been virtual for 10 years already. I mean, that's exactly what we do and where we're going. And the company that we purchased last year, Rubella, that creates the software and creates the world, is now getting bombarded with people and companies and governments that want to have their businesses online, that want to have their operations online. I mean, I understand we have Harvard, we've got Stanford, we've got Texas Tech, we've got Amazon, we've got the US government, even NASA. I've heard so many different inquiries that are going on now that they're going to want to be virtual, like what EXP is. There's no question that we were built for this, that EXP was built for this, exactly right on. And I can tell you, like never before, brokers are looking for answers. Brokers are looking for options. EXP truly is a safe haven for real estate agents and for real estate brokers. And I think the word is getting out more and more, and it's permeating. And that's what's causing this insurge of interest and activity. Like I said, we're at 28,000 agents, somewhere in that neighborhood, closing in on 30,000, a little over 1% of the market penetration here in North America. And it's like, there's almost 2 million real estate agents available. We're just getting started, scratching the scratch, and yet we're having a massive impact on the attitude of real estate agents and brokers nationwide and internationally now. So I'm really, really very excited about that and enthused about what's been happening and going on. It couldn't be a better time to expand your rev share network. There's no question at all, and to expand the company.
Hey, Robbie, can I add something before you introduce Dave? I just want to add something real quick.
Sure.
Because we got to see Dave. We're special. We got to see Dave at a huge EXP event in February, right before this happened. And to think, I've always talked about realtors have 4 sources of income. Their sales. Everybody has sales, commissions. But at EXP, we have 3 other ones. Stock in EXPI, our company, That's an income stream. Revenue share, that's an income stream. And what we developed when we were in Mexico with Dave, the third income stream is investing in real estate, right? And that's why I'm so excited about today, because what's going to happen, guys, every time there's been some shift in the market, whatever you want to call it, shift, downturn, whatever, we've all said, oh, I wish I would have invested then. Right? Haven't we all said that in our lives? I know I did in the 80s. I know in the 80s when I went through this, I went, if I only had money, there were condos going for $5,000 a piece. Condos, downtown Dallas. And nobody could buy them. They're just vacant buildings for years. And I went, man, what if I would have gotten together with my EXP buddies, which is what we've talked about, Rob, right? We've been talking about this for years, that we want to get together and form and Brent, and I've already invested right now since I saw Dave. Just so you know, I took action. Thank you, Dave. I took action, got with some of my buddies in Dallas, and we invested in a property in Dallas. We are building right now in Dallas some condo units. And everybody goes, what do you mean, in this time? Yes. Yes, in this time, because I know the market. I know what's going to happen. But anyway, I just want to say thank you, because for Dave, this is special. This is special what we got today.
It's going to be really special. I just want to add something real quick myself. If you haven't picked up this book, it's talking about how nonconformists move the world. And it was inspired by the four guys that created Warby Parker. I don't know if you've ever heard of Warby Parker, the eyeglass company. Unbelievable stories. I just want to read the first quote in here because it really speaks to what we are doing at EXP. It says, the reasonable man adapts himself to the world. The unreasonable one persists in trying to adapt the world to himself. Therefore, all progress depends on the unreasonable man. I love that. I think we are unreasonable. We are going to change an industry, and we are doing it in a massive way. I couldn't be more excited, Rob. I can't wait for you to introduce this guy. He was unbelievable. I got more great comments after Dave spoke at our event in Puerto Vallarta, 600 and something agents. I mean, one after another, just couldn't believe the value. And they said, we've got to have this guy back in front of us. So here's their chance. So, Brent, anything you want to say about Dave before Rob introduces him?
No, I just was really impressed when I met him, and I cannot wait to have him share with us all he knows. And so I have my notepad. I got my pen. I'll be taking more notes than anybody.
Go ahead, Rob.
All right, then you guys, it's really funny. You guys, I was going to say, you guys got to hear Dave a little bit. There's some of you, about 650, like every one of you mentioned, got to hear my money mentor, Dave Stech, speak in Mexico at our Freedom Summit in Puerto Vallarta there in February. Dave is not only a great friend, not only a mentor, but he's a super great friend is what I meant to say. He's our neighbor here in Puerto Rico. He graduated from the London School of Economics and speaks at Harvard University and other conferences where he shares his annual State of the Union for real estate investors and what's coming up next. Extremely popular. He predicted the real estate downturn that happened a couple of years before it happened. If you fast forward to present day, I wanted to keep this quick and short, but Dave's focused on the current coronavirus pandemic and its unprecedented impact on the American real estate market. He currently delivers weekly updates to his Access Insider network, which I'm a part of real estate investors to help guide them as they navigate this unprecedented, uncertain time. So I want to introduce my mentor, my money counselor, my friend, Mr. Dave Stech.
We're good.
Dave?
I think we're good. I wanted to make sure I was muted because you guys are so optimistic. Just by comparison, I'm going to sound pessimistic. So I had to make sure that I stayed on mute for as long as I could, because of course, when we talk about market cycles, they're not always exciting. And so let me share my screen. Bear with me 1 second. And I want to make sure that you guys are good with this. You tell me, Scott, can you see my screen okay?
EXP State of the Union.
Perfect. All right. Well, first of all of you guys, I appreciate you. And by extension, I appreciate everyone who's on the call. I wasn't kidding when I said I was just listening to four of the most optimistic guys I've ever heard in my life. And so if I sound from time to time like I'm being pessimistic, I want you to know that I'm really just being realistic, because I'm as opportunistic as any guy you're going to ever find. And we're going to talk about that in a second, but I just want you to know that I'm really bullish on where we're heading, but it's going to be a rocky road to get there. So here we are on April 25th. My name's Dave Stech. I'll bore you a little bit with me at the beginning, but not too much. And I'll welcome you from lockdown in paradise. So this morning, my wife Poon was kind enough to take a photo outside off our balcony and to let you know how bad I have it in Puerto Rico, with, of course, Gene and Rob and Scott and Brent. I don't even know our fear here, but there are so many people who are enjoying life here in Puerto Rico during lockdown. And, there are only three things I do every day. I make money, I do good, and I have fun. And all of those things I'm doing more of than I ever have in the past. So I want you to realize that there's a great opportunity ahead of you, but it's not going to be an obvious road. So before we dive in, just a little bit of gratitude. And let me just minimize the screen here so I can see most of my screen. So, yeah, bear with me. All right. So thank you to Rob, Scott, Gene, Brent, and the entire EXP team, of which I view all of you on this call. I always like to express gratitude because I've had an expression for about 40 years of my life that I created when I was living in London for 3 years, going to school and working and all that. And it was grateful, but not content. Every day I wake up, I'm so grateful. I'm really fortunate to be here and to be able to share with you. I'm just not content. I feel like there's an opportunity to do more. And of course, the guys invited me to share my State of the Union. Really, I hope to help you, your partners, your clients, everyone during uncertain times. I'm told somewhere around 100,000 people will eventually view this. And of course, I'm not getting paid a penny. So I start right out with telling you, in short, I'm already pissed. But somehow I'll get through it all because I care for Rob. He's a close, dear friend of mine, and by extension, you and the rest of the guys at EXP. And I really do hope that you're going to not only enjoy this, but profit from it, because otherwise it was informational, but it didn't really change your life in a positive way. So how did I actually get here? Well, as the guy said, by way of Mexico. I met this guy on the street down there in actually I met him in Puerto Rico. In fact, I met you in Virginia, Rob, before even that. And of course, Rob lives down the street, as he said, with Jen, and there's my beautiful bride, Poon. And I was speaking at a conference in San Diego. And fortunately, Rob and Jen were kind enough to show my wife the way to get to Mexico back in February. And wouldn't it be nice to be back there? Oh my God. I could only be there for a day or two because I literally had to fly in from a conference and then had to fly back to a conference. And I didn't get the chance to be able to enjoy much more than hanging out with Rob and Scott and Gene and Brent for a day in an amazing environment where at the end of the day, I was able to sit down in the morning and have an amazing meal with my bride. And after speaking in Mexico, I got so many emails, so many phone calls. In fact, my office manager, Kathy, didn't talk to me for like 2 days. And I didn't even give anyone my contact information, but you guys tracked me down like the dog I am. So I really wasn't prepared for it. I was just there to speak at a dear friend's, event that invited me. I don't know if I got through and responded to everyone who communicated with us, but I just want you to know that I heard what you said. Many of your comments were compliments or thank yous. Some, do I have investment funds for you to invest money? Some were about the economy and real estate and private lending. Others wanted to know what else, we might do that would be of help. And then some of you had kind of specific advice that you were looking for. And I did my best, but I'm telling you, I was pretty overwhelmed. So I read over those emails before I jumped on the call. And I want you to know that we've got somewhere for you to go in the future so that those questions that interest that you had can be served moving forward, not just randomly you trying to track me down. So I also want to say thank you, because at the end of the day, I don't have to be here and you don't have to be here. I've done really well in my life financially and otherwise, and I don't have to be here. And you've all been successful without me, so you certainly don't need me. I really do believe that my wife or my family and I would probably stumble through the rest of our life without you, and you'd be great. But I think we could probably help each other, especially in the midst of uncertainty. And because we're all stuck at home, or frankly, I hope we're stuck at home because we can get through the pandemic faster, we're all hoping it will end soon. So regardless of what you hear or what you believe, you've taken time out of your day to listen to my thoughts. And what I want you to know is it's all about being the victor, not the victim. I can't remember the last time I was a victim. There was a downturn in the economy in 1979 and 80, and real estate took a dive. There was another one in 89, 90, real estate took a dive. There was another one in 2005 through 2006, real estate took a dive. Guess what? There's likely to be some correction as a result of all this. But real estate tends to lag those other things, and it leaves clues. That's why I love real estate, because when real estate is going to correct, it leaves clues in advance so that I'm not in the position of being surprised and seeing my stock price drop by a third overnight, or seeing oil drop to the point last week, literally this week, oil dropped to the point where people are literally coming to you and saying, if you'll take this off my hands, it's for free. If you can, in fact, I'll pay you to take it off my hand. It's a crazy market that we're in. And so for you to stick your head in the sand is just shameful, because what I'm going to tell you is going to actually help you understand where we are and then allow you to position yourself to win from it. So what am I going to do? Talk about the global reset, talk about volatility and the fact that it'll equal opportunity for you, do a quick economic update, talk about what you want to do, the 5 things that our family's doing that maybe you can cheat off us and do yourself. Be a learner, not just learn it. I'm sure you don't know what I mean by that, but you will. And then give you a couple of last thoughts. There's a global reset happening. This is something that hasn't happened in the past. That's one of the things that's so uncertain about what's going on moving forward, is that the entire globe is resetting. As Rob, and he mentioned that he's one of my Access insiders, we have a small group of people, of which Rob is part of it, that hear from me weekly, as well as my family, on what we're doing. And they have heard me say for the last year that there were too many things that were uncertain for us not to have a recession. What happened was that oil and COVID-19 weren't on the list. The stock market and real estate were at their historical peaks. So by definition, when any market is at its peak, it has more downside than upside. So when you're investing near the top, you're really more of a speculator. If you know where the bottom is, you're truly an investor. And I believed that cash would be king. So last year I started stockpiling cash because I felt like there would be great opportunities, that America might just be on sale again. After all, that's how I viewed it a decade or so ago. And I wasn't just generating cash for investment purposes, but I was doing it to make sure that my family and I could weather the storm, that we would be in a position during the ravages of a recession to be able to capitalize on it. So how was I so confident in where we were going and why I felt as though we were heading there? We do an enormous amount of research, and our data sources are extensive. And we spend tens of thousands of dollars a month trying to figure this out. I don't do it for you. I do it for my family so that we don't make mistakes. We've made money on 99.9% of our deals. I won't show you our scoreboard because it's not relevant today. All you need to know is that we lose 0.1%. We're not perfect, no one is, but we're as perfect as you can get. It's because we cheat off other people and that we're willing to invest in ourselves through research and other things. So now let's talk about volatility and the fact that it does mean opportunity and what you ought to be doing as a real estate professional now. I deliver, as Rob said, the State of the Union. And I started in 2005 on the right-hand side there at Harvard when I talked about the fact that the market was going to implode and that I was getting out of the market because it was going to take a nosedive in 2006. Guess what? I was wrong. It took its nosedive in February of 2007. So as I always tell you, and I think I started with this, forecasts are always wrong. The only question is by how much and in which direction. Fortunately, I've been right in the right direction. And in 2008, to that audience at the bottom there, I said, I'm going all in Las Vegas. Well, you can imagine how that went over because it was the foreclosure capital of America, and 7 out of every 10 homes, 68% were underwater. So you can imagine I got thrown out of that room too. In 2011, I said, we are at or near the bottom of the market. So if you don't take advantage of this now, shame on all of you, because I told you what was going to happen in 2005. I told you in 2008. I don't know how many of you did anything about it, but I'm telling you in 2011, the market is going to bottom soon. It did in January of 2012. So at the end of the day, right now, take inventory of yourself. What do? Well, I've recently taken inventory of myself. I'm a market timer in real estate. I got out in 2005. I got in 2009. I got out in 2018, and I plan to get back in soon. But see, I do something different than you. You're a real estate agent or a broker. I am a real estate investor. One of my sons has a real estate license. My other son built one of the biggest lending companies as an LO. At the end of the day, we are very involved in real estate and lending, but as investors, we think differently than you. So you should be going pedal to the metal right now, whereas we have times where we have cause for pause. Because the single most important word in real estate is timing. If you can get the when right, the where, the how, the who, and the what are insignificant. Imagine getting in your favorite market back in 2011 before it took off in 2012. That is pretty cool. That's why I'm a real estate investor. But I'm an investor depending upon where we are in the market cycle. I get in, I get out. Most of the time I'm in, but a lot of the time I'm out. Because, of course, the most important thing in real estate is to get out at the right time and get in. Which of those is the most important? Think about that for a minute. Is it more important to get out of the market at the right time or in? The answer is to get out. Because you know what happened in 2006 and 7, and most of you didn't even have any idea it was coming. A lot of people can get crushed. So we get out and get in at the right times. And folks like Rob, as part of our insider group, are able to not just earn active income off commissions, not just earn recurring income off of those of you who generate commissions as well, but they can generate passive recurring income off investments. So what I want you to do is ultimately win the game of life. And that starts with making money. And so as a real estate investor, you can do it, but that's your choice. That's not what I'm pushing today. I'm also a private lender. So I loan money to real estate investors because it allows for me to scale the business and help my flippers know what's coming, where it's coming next, what's happening, how they can capitalize on it, and then I give them the money to do it. At all times in the market cycle, I can do this because flipping works anytime. I try to be a great husband and a partner to my wife, Poon, and I try to be a great dad. I really want to optimize my family. I believe I was put on the earth to be a great dad. All this other stuff is just a way to make money. I have 2 sons. My youngest one, Josh, is getting a lot of attention. He was on TV there in the middle this week because he's looking to build another billion-dollar company in real estate. Between 2013 and 2017 or 18, he actually built the largest hard money lender in America in 4 years, which became a billion-dollar company. And now he's excited about the real estate play and has built another company that's already on its path to success. So at the end of the day, we're serious about real estate. We're not just doing this for the heck of it. I guess what we could do if we were smarter is we could, invest in a little better lighting. You see the guy on the left there is in a studio, and the lady on the right's probably in the studio. And my son, he told me, was at 6 a.m. in the morning on the 4th level. He's got a home in San Francisco that's 4 stories, and he had to get up to the top because his 3-year-old and his 6-month-old would be trying to chase him otherwise. And I said, dude, you got to get some makeup and some better lighting there. Come on. Anyway, so economic update. For any of you who've heard me say this before, you can't say I didn't tell you so, but I've been showing a slide to Rob and to others. In fact, I showed this in Mexico. Think about that in a minute. I showed this slide in Mexico the month before this whole thing started unraveling. And I said, I've shown this slide at every presentation in the last year. Here I am in Mexico. It's February, and I'm telling you to expect a recession in 2020. And I gave all these ideas and all these things that could potentially trigger a recession. And I honestly expected more than one of them to do it. Well, I didn't see oil prices going to where they were. I certainly didn't see coronavirus coming into our future like it has. So even folks like me who are market timers, who have an economics background, who speak at university, even people like me are still struggling to understand how we got here. Now, I understand actually what the recent past has meant and why it's happened. But the question really is, where are we going for the future? Well, we already had a situation where we had a house of cards. Now, I don't expect that you're economists. I don't expect that you're even business majors. But I'm telling you, when you're at or near the peak of something, like the stock market or junk bonds or the unicorn valuations, privately held companies that grow to $1 billion, like my son's company or Airbnb or Uber, and there's record high auto debt and student loans and real estate and non-bank mortgages. All of this debt is going to have to be structured in some way at some point, and it's not all going to happen by this summer. So I'm telling you, it's not going to be the V shape that you might hope. Now add to that the businesses that are laden with record debt. You see, public company debt grew 4 times faster than revenue from 2009 through 2018. That's a 10-year period. Imagine your household, and all of a sudden your debt, your expenses are growing 4 times faster than your income. How's that going to work out for you? The good news as you look at the bottom is that building materials and real estate and home building have actually performed better. They don't have as much debt, which is really good in the building segment because the debt that they have doesn't have to be repaid that quickly. Now, I'm sorry, I don't want to lose you, and I don't want to speak over your head. I don't mean to do that, but this is really important because it ultimately kind of boils down to the house of cards that COVID basically tipped over and the ghost towns of the United States that it created. Here's Vegas on a Saturday. Can you imagine on a Saturday in Las Vegas or in Times Square or in Washington, D.C., where we found a person, or Chinatown on a Saturday in San Francisco, and the beaches of Southern California shutting down, the whole country shutting? Who could have imagined that 2 months ago? Seriously. I mean, if I had told you that 2 months ago, in fact, if I'd told you that when I saw many of you in Mexico, you would have looked at me like I had 2 heads and I wouldn't have been invited back to talk. But at the end of the day, we're somewhere. Where is that? Today, here's where we are. We're somewhere in this situation called a pandemic, which is likely the greatest in 100 years. We're also the greatest economic contraction since the Great Depression, where I think Scott mentioned it earlier, weekly unemployment claims are $26 million or 26 million people in 5 weeks, which is greater than the 23 million job gains that have been gained in the last 10 years following the financial meltdown. Think of that. 10 years is 520 weeks. We lost more jobs in 5 weeks. In 1% of the time, we lost more jobs. It's a crazy phenomenon that we've got going on. While oil prices are going through the bottom, and all of this is happening simultaneously. It's not like one of these things is happening. They're all happening. The greatest central bank or government intervention of all time. And at the end of the day, because it's all happening simultaneously, including the positive stuff that the bank and the feds are trying to do, it puts us in a position where the word we hear most often these days is unprecedented. Well, you hear it all the time. I almost get tired of saying it because it's so overused, but look it up sometime. It's an adjective and it means never done and never known before. Think about that. It's never been done in our lifetime and we've never known what it's like. So when we say unprecedented and we refer back to things like the bubble in 2001 or 2018, which were also viewed and characterized as unprecedented, they weren't. They were meltdowns to be sure, but unprecedented? No. I've studied 1979-80 and the collapse after that, 89-90, and of course I predicted the 2005 crash, and here we are looking at those, and I can tell you, I'm really having a hard time on the prediction on this one. I just believe it's going to be longer than we think. But I'm always reminded this is the time to be fearful when others are greedy and greedy when others are fearful. I probably don't have to tell you whether people are greedy or fearful now, but people are on fear alert. So it's a great time if you choose to take advantage and turn the economy into your economy. So here are those 5 things. Number 1, prepare. There are 3 stages that are a family. We have a fair amount of wealth, so we've created a family office where we treat our family like a business, not in the cold sense, because we're still hugging and kissing and loving on each other, but we're in 4 different cities managing different businesses that all roll up to this empire. Now, we're not Rockefeller and we're not Trump, but we've done pretty well compared to those of you who are likely on this call. Yeah, on February 28th, my sons and I had a call with the guy in the picture on the bottom on the lower left-hand side. So Dr. Jordan Schlane is sort of the doctor for the ultra wealthy, the people who roll off your tongue, whose names roll off your tongue. And he is the CEO of a company called Private Medical, which is a referral-only program, and there are only 800 or 900 clients. So we had a call with him, and he told us this would be much worse than people were being told. And of course, we were naturally skeptical. I'm not an epidemiologist. I don't know anything about what's going on from a health standpoint. But, when somebody that smart tells you something, it's like the guys who kicked this off today. When they tell you something, they know what they're talking about. They know how to build a company like EXP, and they know how to help you build it with them. Well, I don't know anything about health, but I know a lot about real estate. And we went into war room mode quickly as a family because I believe, and we've always believed, that every time we go into crisis, we prepare for 3 things, or at least do 3 things to prepare. Number 1, we insure. What does that mean? Well, think of insurance, property insurance, health insurance. Why do you buy it? Because you want someone else to accept the risk for what might happen to you or your property. Well, you should have been doing estate planning. You should be doing, buying N95 masks, food, water, cash, guns. I mean, desperate people do desperate things. I don't plan on using one, but I certainly don't want to not be insured against the likelihood of it happening. Number 2, de-risk. That means you've got to de-risk your family and de-risk your financials. Our family went into quarantine. We just didn't mess with this. We decided we were going into quarantine, and it was right after I got back from a trip to San Francisco, where I flew out on a Wednesday, and as the world was unraveling, I decided to fly back on Thursday. I literally spent 28 hours flying from Puerto Rico to San Francisco and back because things unraveled so quickly. So optimize your financials. And I know it's been very difficult for most of you, but it was easy for us because we were anticipating recession. We just didn't know what was going to trigger it. So we were exactly where we needed to be, but we had to go into quarantine. And then in parallel, in week 1, where we're insuring and making sure that we're safe and healthy, while we're de-risking, we're also optimizing. That's what want you folks to think about is, what are you going to do to optimize? Look, wealth is going to be transferred. The only question is, which end of the receipt are you going to be on? And so I believe I want to be on the reception side, not the giving side, because I know volatility equals opportunity. This is not my first rodeo. Well, rather than show you a lot of other bad news charts, which I could clearly show you about deaths and new cases and all that, let me give you the good news. If we had not taken measures, look where we'd be. The fact that we did has been difficult for all of you, and it's been tough on our economy. But at the end of the day, if we hadn't done it, I can assure you that from a hockey stick standpoint, we'd be in a place that none of us would want to be. So we have to do the things we have to do when we have to do them. What do you do at every point in the market cycle? Well, look at optimism there on the left. Think 2003, because all of you are real estate agents. If you go back a decade, or brokers, you know exactly where I'm going. You were optimistic in 2003. You were excited in 2004. In 2005, you were thrilled. In 2006, you were euphoric. And the people who were euphoric were hearing me tell them that the market was going to implode. So you can imagine how I was viewed. At that time, 2007 happened and people started becoming complacent. They were in denial. They became anxious in 8. Then they were in full-fledged denial in 9. Well, we're not in 2010 or 11, but that star probably represents where we are today, if you think about it. People are fearful. And in some cases, they don't know what the future holds, or they're starting to hear of people that they know who've been infected, and they're starting to be a little panicked. There are some people who aren't getting government assistance as quickly as they'd like, and they're not taking as much control of themselves and their situation as perhaps they should have. So they naturally revert to anger and want to blame other people. Now, look, I grew up in a trailer park for the first 20% of my life. My parents had an 8th grade education. I ate mayonnaise sandwiches for 22 months while after my dad fell off a job that he was working on as an iron worker. I know what it's like to be angry. I know what it's like to have a scarcity mindset. And I'm telling you, get over it. It's not going to do you any good. This is the time where you need to realize that the other 80% are thinking that way, so you need to be in the 20%. If you can be in the top 20% of the 20%, like the guys who just introduced me, now you're in the top 4% and you can capitalize on anything because you've got the confidence. What do I have that you don't have possibly? Well, I've got 3 things. 1, I have research. 2nd, I got experience. 3rd, I have knowledge that I've generated over the years. That's allowed me to give me the confidence to know that no matter what anybody throws at me, my family and I are going to come out on top. I don't think I know it all. I know I don't know. In fact, I always say, I don't know 99% of stuff in life. But this real estate thing, this lending, I got that nailed. So that's where I focus my energy. And that's where I hope that you can benefit from what I know. Number 2, remember I said number 1 is to plan and prepare. Number 2 is to take what the market gives you and survive. Now, normally when I show this slide, I'm talking about the real estate market. I don't always do the same things in the real estate market at different points in the market cycle. Sometimes I buy and hold as an investor. Sometimes I flip. Sometimes I lend. Sometimes I do vacation rentals. Sometimes I do conversions of apartments to I do different things depending upon where we are in the market cycle because I know exactly what to do on that wavelength that I just showed you on the previous slide. But now many of you have to survive, and I get that. And all 3 of these government agencies are going all in to save you and to save the housing market for you. Now, that's important because if you don't seize the moment and pivot quickly if you need to, you're not going to be able to thrive. You know, why am I on this call? I mean, I obviously don't need to be, and I don't need them. I'll tell you why. I've gone through 3 stages of my life. I get to survive. That's what I had to go through while I was in a trailer park. Then I got to thrive, and now I get to matter. I literally get to matter to people like Rob and by extension you, and that's important. Now, one of my trivia questions here is, what percentage of politicians have been trained in business or accounting or finance or economics? Well, remember that Pareto principle, that 80-20 rule I mentioned? Turns out that 13% have been trained in business, accounting, or finance, and 8% in economics. That means 80% have not been trained for what we're doing right now and what they're doing. And what are they doing? They're pumping money into the economy. And we all hope that it's the right thing, but what we know is it's adding to our national debt. at a ridiculous rate. You see, when you go back and look in 2008 through 2011, they increased the national or Fed's balance sheet by $2 trillion. And it took them 3 years to do it. Well, you know what happened? $2.268 billion, $2.268 trillion, rather, in a few weeks was added to their balance sheet in order to try to jumpstart this economy. Now there's another 484 billion, a half a trillion more. And I got news for you. That's not the end. It's still going to be coming. So the government's going to do whatever it has to do right now, which is more than it did before and quicker than it has ever in history. Now, the money is starting to show up for many of you. You're all getting either the payment protection plan, or you're getting EIDL, or you're getting stimulus money, like a check like that. Or you're getting if you have direct deposit with the IRS, you're getting a account status like that, where an ACH payment is going into your account if you're married for $2,400. I underlined this thing that I'm sure most of you have not heard of before, because it's something that I learned when I was in graduate school in economics, and that is moral hazard. The notion that there's a shift of risk from you to somebody else. Now, what do I mean by that? If you buy insurance, that means that you have then shifted the risk of any loss to somebody else. If your health's bad, your insurance company pays. If your property gets vandalized, the insurance company reimburses you. So that's this notion of moral hazard, and there's a certain amount of insurance that we need in our lives if we're smart. Will property ownership ever be the same again? And how does it relate to that moral hazard thing? Well, in America, the government can't just arbitrarily decide to take your property from you. You're a landlord or you're a homeowner. So what could they do? Well, they can control and influence people who have to do with property. You see, the government is overruling lease agreements now and mandating rent forbearance. So rents are being pushed out. The government is also saying it's okay not to pay your mortgage payment. They're also telling lenders that they can't foreclose, and they're telling landlords that they can't evict. Well, I understand why that's being done, but ask yourself 3 questions. Number 1, how do you as an agent or as a real estate investor price these facts into your purchase decisions or those of your clients? How do you do that in the future? Because it's a real risk. Prices could come down given that an investor doesn't want to buy if they can't collect rent. So I'm asking myself, how will this moral hazard, the notion that what I am potentially going to impact is now being shifted in terms of accountability to somebody else. I worry about myself if I fall prey to doing things to rely on others. Don't rely on others. Don't allow your family to rely on others, other than you, of course. Your clients, your tenants, make sure that they know this is the time to take responsibility, because other things are happening demographically. You see, if I had started the year 2020 and given you a forecast of what was going to happen, I could have told you confidently that there's going to be 3.8 million births, there's going to be 2 million marriages, about half of those in divorce, and another 3 million or so in deaths. I could have told you that because I can look at statistics and know that. Well, now we've got a black swan called COVID-19. Well, let's talk about divorces. It's generally felt that because we're in closer proximity to those that sometimes we don't want to be, thank God, present company excluded, because my wife's the best woman on the planet. Guys, I got her. You get second. But at the end of the day, it's all about, how are you going to get to? It's expected the divorces are going to go up. We know deaths are going to go up because they're already going up. Marriages are going down, not because people don't want to get married, but because they're delaying them. So if marriages are delayed, births are going to be impacted. And the question is, how many people who are in isolation who aren't being divorced or getting divorced are having more children? And those that are the offsetting the number of people who would have gotten married and maybe had first children. So there are things that are happening that we in real estate need to be sensitive about, because what this does is allow for us to predict demographic shifts, international migration. How many people are able to get across the border? You've seen what the president has recently done. He's stopped all the green cards and all the other things so that people can't get across the border unless they have a very, if they have to have an unusual circumstance that requires that they work here. And so what's going to happen is what was already declining over the last few years is going to go to zero. We could see population growth of only 0.35%. That's a third of 1%. It was predicted back in 2017 to be twice that. So things are shifting. That means the number of households are going to shift. That means the number of divorces that will create demand for one-person housing is going to be impacted. It's already happened in China. And it also means that markets are going to turn from very strong to strong, which is where we were in the fourth quarter, to now a situation where markets are slow or very slow. Google allows all of us to know what's going on. But of course, you use Google to find something, where we pay for what's called predictive analytics to see what Google searches are happening, so we can match what's happening in your mind with what's likely to happen as a result of it. So we've been able to track unemployment, because as unemployment went from virtually nothing up to 6 million, we saw search results going up in the preceding week. We knew it was going to come down from 6 million to 5 and to 4 because search results started dropping. So new home Google search results are down 24%. And some of this can be impacted by builder spending. We also know that there's an opportunity for pent-up demand on the other side. And in the case of existing, we know that Google searches are also down. We know that migration is happening. If you look in the blue and the red, that's where people currently are. In other words, people, when they do move or have been moving, then they've been moving to those cities at the top and generally moving out of those cities on the bottom. Well, where were they last year? Look at New York City, that outlier. Last year, a lot of people were moving. Look at this year in red. They can't move. So things are happening to affect the housing market that obviously you don't track, but I have to, because I'm trying to be an investor. I'm not trying to sell a home. California realtors have expectations. I use this because I think it will help you get a sense for what we think may be coming next. Turns out that when surveyed recently, near the end of March, early April, they were asked, once shelter in place is relaxed, what do you think the number of sellers will be? Will it be higher than normal or lower than normal? And what about buyers? Well, realtors believe, those of you who are watching this yourself may have participated in that survey, fewer buyers than normal. 41% of realtors said there'll be fewer buyers versus 27 who said more. And realtors believe that 46% more sellers will happen instead of 21% fewer. In other words, crack the code, there are going to be more sellers than buyers. And buyers, we believe, are going to be looking for great deals. Why do we believe that? Well, because 79% told us in the survey that they're anticipating 5% or greater lower prices. 56% of the 79% said 5 to 10% lower, and 23% 10% lower. Now think of this. These are largely people who at the end of 2019 were happy to pay full price. Now they're more skeptical, especially on existing. New homes, there are going to be more incentives, there are going to be attractive financing to go with them, and so on. I believe new homes will be less impacted from a price standpoint than existing homes. And I hope, for your sake, that it's wrong, because I'd rather you make your percentage commission on a higher price home. But if you're asking me, what do I believe? I'm telling you what, based on others, are telling us are survey results that would lead us to predictively analyze the future. Morgan Stanley, we all know, JP Morgan, when they look at existing inventory, the good news is the existing of inventory homes that were available to sell were at the lowest level on record going into COVID-19. That is great news. They believe, from a predictive standpoint, that in the best scenario, home price appreciation will be 0 for 2020. In a worst case scenario, they believe prices could drop 10% and in the middle 5. Now, anytime I see somebody say 0, 5, and 10, it looks like there's not a lot of sophistication associated with that bell-shaped curve. But the point is, it's yet another data point from another research source that we pay to try to get intelligence so that we can make better informed decisions. And by extension, Rob can. By extension, the other guys can, you can. I want Gene to benefit. I want Brent to benefit. I want Scott to benefit. And by extension, I want you to benefit from what I'm sharing, because I'm going to do this anyway, and I'm not selling anything. So at the end of the day, this is for you to make better informed decisions about what you're going to do to pivot if you need to, or to optimize for what you have. There's a big shift in demand and supply that could be created from distress and opportunities. It's called supply and demand and price. Well, for those of you who've had Economics 101, you know that. But what you don't know is that before we went into this, demand and supply were more or less in balance. And now both price and demand will likely soften. But it's going to vary so much across market. So as you well know, all markets are not created in real estate. They're not all equal. In fact, there are 405 MSAs. Those are metropolitan statistical areas, which are otherwise known as markets across the US that have at least a certain population base or more. Well, what's going on in those 405 markets? See, there is no US real estate market. So anybody that ever tells you that, as soon as they say what's going on in the US real estate market, you know they don't know what they're talking about. Because the US real estate market is a sum of 405 markets, or millions of different census tracts. It's only an aggregate of what's going on in all those places. Every market is different. Right now, there's a concentration of jobs in certain sectors that are high risk. Think about cruise. How are those companies doing? Well, the markets that serve those are being impacted. Think about Miami. From a cruise ship standpoint, that's affecting their employment. How about oil and gas in Houston? How about leisure and hospitality in Vegas? I could go through all this, but what do I do with it? Well, I don't sit around saying, it's a pretty map. No, I try to figure out if I can look at each of those 6 sectors and look at all 405 of those MSAs, I can then figure out which ones are high, medium, and low. Low being best. Low means they have a low likelihood of being impacted by COVID-19. Well, wouldn't you like that kind of intelligence? And oh, by the way, you can pick your market in here, and I can't show 405, but there are major markets like these, and then there are secondary markets like these, and of course there are tertiary markets as well. But you can see third from the right, if you're in Indianapolis now, you're not likely to be as impacted as, say, if you were in Miami. Every market is different. Number 3, once you've prepared, once you've started doing some of this thinking about what's going on, now it's time to start deciding. There's something called the money game that I showed many of you when we were in Mexico. This is a triangle that I drew on a napkin 30 years, with my kids. And I was trying to explain to them the money game. And I said, there's only 3 things you're ever going to have to know: how to generate income, otherwise known as cash, how to accumulate assets that will grow your wealth, either because they go up in value or they throw off income, and then keep as much of both as you can. Now, you on this call are different than me, but I do private lending primarily to flippers to generate income, generate cash. And when I'm invested in real estate, it throws off cash flow. For those of you who want to be serious investors, you may do private lending yourself or you may not, but all of you have the capacity to do real estate. For God's sakes, you know it. So why wouldn't you? You see, it's one thing to generate a commission, but there are 3 types of appreciation that you can benefit from. You think of market appreciation like I used to before I became a student of real estate. What I realize now is that there's instant appreciation, where you buy a property for less than it's worth, that's probably dated, then you fix it up and remodel it, and you force appreciation. And then if you do that in the right market, like I used to in San Diego or Tampa or Las Vegas or other markets, then I got market appreciation. Think about all the money you could have made over your career if you would have known what I know when I know it, and you were to get in and out at the right times, and you were to benefit from cash flow on real estate, instant appreciation by buying at a discount, forced appreciation by remodeling it and lifting its value, and market appreciation. That is how you make three types of money. As I said when we were in Mexico: obscene, ungodly, and embarrassing. So that's what I want for you. And lastly, I use Roth self-directed IRAs. You've got to do that. And I happen to live in Puerto Rico with the guys on the call here because we benefit from a tax standpoint. Know who you are and tweak your model. This is one thing that's going to be really important for you as you move forward. You're going to fit in one of four glasses. Some of you on this call are optimists, and I don't discredit you for that. You're an optimist. You believe the glass is half full. I get it. There are some of you who are pessimists. I also don't have a problem with you. You think the glass is half empty. And there are times where I'm optimistic and times when I'm pessimistic, but what I really try to be is realistic. My glass is neither empty nor full. It's just what it is. It's just a glass of water. This allows me at different points in the market cycle to be unemotional. I can actually make better informed decisions than you can if you're being guided by what you believe or what your clients think. Because home buying is an emotional decision. Investing should not be. So if I'm more realistic, I can be an opportunistic person. An opportunist is somebody like me who says, well, while you idiots were arguing about the contents of the glass, I was drinking the freaking water and it's empty. So you don't even have a half of a glass anymore. I mean, I want to make a point here that you got to be realistic, and that's what I've tried to help you be today. But I want you to be opportunistic because it's a very volatile time, and this is the chance to take realism and turn it into being an opportunist. And the health and the economic crisis is still in the early stages of unfolding. I'm sorry, it's not over. In fact, the fallout is just beginning. You may have experienced the crash in 2008. You think you know what to expect, and you don't. You haven't seen anything yet. And the reason I know that is because housing markets and their corrections lag. When the real estate market hit its demand peak, think about what I just said, demand peak in California, it was May of 2005. When did it crash in price? It didn't drop in price until February of 2007. It took 21 months before, while demand was dropping like a rock, for the market to finally correct. That is important for you to know. The stock market can drop, as you well know, by a third in a week. Oil and gas, look what's happened to it. It literally went through the floor. Like, it's impossible. It's never happened before, and it did it in 2 days. By contrast, real estate takes time, and it leaves me clues. That's why I win 99.9% of the time, and you can too, whether it's on real estate sales or real estate investing. So what factors need to be present in order for home prices to crash? There are really three. The most basic are mortgage interest, and I don't have time to get into a lot of detail on this. I've got a whole slide on that, but mortgage rates would need to increase enough to discourage buyers from entering the market. Second is inventory. Inventory would need to expand substantially and quickly, and inventory could, if there are less buyers and more sellers, going into the move out of your shelter place that we're potentially going to. And then distressed sales that are created by layoffs. Look, something's got to happen as a result of 26 million people being out of work. I mean, think about that, 26 million people. So at the end of the day, we're going to see loan defaults and distressed sales and foreclosures if we're going to see an increase significantly and a high likelihood of a crash. That's what the Fed is trying to stave off, is a situation just like that. Now, as I said before, certain geographic opportunities are going to recover faster or not going to be impacted as quickly, and therefore we'll be able to segment boom markets, new boom towns, and those markets that will have less competition. Think about it. Orlando was a very competitive market moving into this. But you think that Orlando is impacted by cruise? Yes, you may have heard of somebody called Disney Cruise Line. Do you think they're impacted by seniors? Yeah. Do you think they're impacted by hospitality and leisure and transport? Yes. So some markets are going to be impacted. I'm not trying to rain on your parade if you happen to be in any of these markets. I'm just telling you, be a realistic, because what'll happen and has happened already, and we've seen it before, and we know the story. We saw in the last month 500,000 millionaires lose their millionaire status. At the end of 19, there were 11 million of them, including the guys that were on the call with me here. And fortunately, they had an idea this was coming. They know how to pivot. And at the end of the first quarter, there are 500,000 people who didn't see it coming, who didn't know how to pivot. And it's dropping in April. So there are going to be more people who lose millionaire ranks in April, and it's not going to stop there. Now, I know what's going to happen because it happened before. It's happened in 3 cycles that I've been a part of, or at least been a student of, and one that I experienced full on. So the good news for those of you who are in what I call the top 1%, the top 1%, incidentally, are people who either generate income of $400,000 or more, or have a net worth of $2 million or more. That's generally, and I'm rounding now, the top 1%. Well, if you make $100,000 or more, you're in the top 10-ish%. If you happen to, have a $500,000 net worth, you're probably there as well. So just because you're not a millionaire or you don't make $1 million a year doesn't mean you're a bad person. It doesn't mean you can't get there. I started in a freaking trailer park for the first 20% of my life. So I know there's an opportunity for you to capitalize, but it's all about timing. You have the best opportunity for timing moving forward, in my opinion. It may not feel like it at times, and it's not going to be a smooth road, and it's not going to be a gradual descent. It's going to be a little rough, but that's okay, because that's where I call it the have-nots are going to fall off the train, and the haves are going to capitalize on this. Just like in 2007 through 2009, when all of a sudden those people who were successful, the top 1%ers, they saw their income drop 36%. And then when the recovery happened, they gained it all back. While meanwhile, the 99% who lost it saw almost a flattening during the same period of time. So we've all heard this expression, the rich get richer, the poor get poorer. I'm not trying to say that that's a good thing. I'm saying it's a real thing. It's just the way it is. There's a transference of wealth, and you want to be on the receiving end if at all possible, because the top 1% typically capture 95% of the recovery. So when you know that, and now you do, know that better days are ahead for those of us who understand this, who understand there's an opportunity and who sees it. Look, if I tell you this and you don't do anything, what's the point? I want you to seize the opportunity. Do I feel like you're going to compete with me? No, I'm looking to collaborate, not to compete. And that's what EXP is all about. It's why the guys who do these webinars for you are doing these for you. Number 4, stop talking about legacy. Everybody says, oh, I want to create a legacy. Some people say, I'm going to write a book about it. Here's an idea. Just do it. How many people actually do it? How many build an amazing legacy? Very, very few. It doesn't mean they're bad people. It's just that life kind of gets in the way. I believe that you, as the head of your household, can believe that you can take advantage of this, take the economy and make it your economy, and do it relentlessly. Do it while you're alive. Don't worry about a legacy when you're dead. What good does that do you? And those that have the highest likelihood are those that are the most successful. That's why you have to be successful. I always say to folks, when you have one option in life, someone else has all the leverage. When you have 3 different things that you can generate income on, just like Gene talked about at the beginning, when you have 3 different ways you can generate income, you don't have one option. You have multiple options. You're the one in the driver's seat, because at any time, any one of those could be doing the best. And at the next time, something else could do the best. What a great position to be in. Just do it. You're in lockdown. Build a legacy. Create something amazing with your family. last year, my sons and I made a decision. We decided that, after college, my two sons went to college in 2002 and 2004. And in 2009, we got back together again and created a real estate company. Go figure. And we crushed it. And in 2013, I've always said, sons, I want you to leave and outgrow me. Well, sure enough, one of them outgrew me and actually did it twice. And my other son is catching up and really crushing it right now. And in 2019, after one having done it twice and the other one doing it now, we decided to get back together again. Even though we're in different cities, we can talk, we can text, we can FaceTime, we can do whatever we need to and tell each other how much we care for each other and to capitalize on this, to take this volatility and turn it into an opportunity and to make 2020 our year. We're going to make more money, do more good, and have more fun. That's why I'm on this call. Look, if you haven't benefited at all from this call, then you should tell Rob and the rest of the guys. If you have benefited, you should tell them. My whole goal is to make more money because I can do more good and have more fun. And by doing that with my sons or you or Rob or Gene or Scott or Brett, I can do more and really, really be the luckiest guy on the planet. And lastly, and fifth, you've got to be a learner now. If you don't, you're preparing to fail. What do I mean by a learner? Well, in times of change, the people who inherit the earth are the people who are learning about the future. The learned, that is, people who already know something, the learned find themselves perfectly equipped to deal with a world that didn't exist anymore. It's the craziest thing, but think of how big of a change things are, the pace of which change is happening right now. If you just stay where you are, you're going to be beautifully equipped for a world that leaves you behind. You're going to be roadkill. You've got to be a learner. You've got to strive for more. You've got to want, as I call, a quest for more. I know this because it's not my first rodeo. I thrive on this uncertainty. I honestly didn't expect an opportunity like this again in my lifetime. I saw it in 79, 80, and I didn't take advantage of it. I saw it in 89, 90, I didn't. Why? Because I wasn't in real estate at that time. In 2002, I got into real estate. In 2005, I saw it coming, and oh my God, our family crushed it in the last decade. But we're at a time that's different right now. Uncertain times separate those that are amateur from those of us who are professionals. I've seen it play out before multiple times. It's not my first rodeo. In 2005, I exited the market publicly by announcing at Harvard that I was getting out. I avoided the meltdown. I also publicly announced I was getting back in the market in 2009 and 10 when it was in a free fall. And I was going to do it in Las Vegas. And we were going to make a fortune. And everybody looked at us like we had two heads. And we did. Now, I've been anxiously awaiting uncertainty to present itself again, because when the market is on its run, every idiot is making money, but everyone has all the answers they think until they don't. So now people are scrambling for answers. Times are unprecedented. The question is why, and it's when and who. Well, I'll tell you what the when is. The when is now. You shouldn't be sitting around hoping, like the book, The Secret. I'm sorry to diss on it, but it's not going to land in your lap. You got to seize the moment. Opportunities come around for people who are opportunistic, not for people who are just going to watch them happen. You think about it, there's a parade, and I'm on the float because I want to be on the float. Now, people are sitting on the curb, and without people on the curb clapping, there would be no point of it having a float. My whole desired outcome is to be a leader while there are other followers, just like you should be, to attract people, because the who is you. If you can do what you do now, if you can pivot if you feel a need to, if you can capitalize on the opportunity that you've got, instead of thinking you're a victim and being the victor, you'll be able to do amazing things. Live workshops, these are on hold. We do a live workshop called Just Be the Bank, which Rob has been to, and you can see him there. So when we could do live workshops, people like Rob or Jen, who's in the foreground, or other people can come, and we can have, in fact, I think that was Rob's fourth glass of wine right there. He and Jen like wine, by the way. But workshops can happen live. You can go out and show homes. You can have other people show your homes. Live things can happen. But now it's virtual time. What are the benefits of doing things virtually? Well, if you're seizing the opportunity to do virtual tours or other things, the 8 benefits that I see are: number one, for those of us who go places, we can save the cost of airfare. I have 0 trips on my calendar for the rest of the year because I don't know when I'm going to be able to travel again. And in the first part of the year, I traveled once a week. I'm saving the cost of nights in a hotel. I'm saving the time being back and forth. I'm making more money because I'm not having to travel. I'm starting and growing our passive recurring income. I'm making sure that folks like you aren't solely reliant on active income by having a taste of the downside recently, which is a bad taste in our mouth, where all of a sudden the active income you were generating gets cut in half. That's no fun for anyone. You got to be a fewer better. Just like the guys that invited me to this call, be a part of this fewer better community. And then when there's an opportunity to attend an event live, go ahead and attend it. But now participate in these virtual events. My wife Poon moved to the US about 1.5 years ago from Thailand. And I thought to myself, oh my God, how's she ever going to learn how to cook American food? And she said, I don't know if you've heard, but God made YouTube, I think. And she said, I can find anything I want. She cooks the most amazing meals on the planet. So virtually anything can be done now. And yes, I'd rather be with you in person like I was in Mexico, but I can't be. That doesn't mean I shouldn't be. We're on a call. So my last thought, simple. Never let a good crisis go to waste. Those of you who are history buffs may remember that Winston Churchill was given credit for this in 1944 in the middle of World War II, when it couldn't have looked more dire for a lot of people. Don't let it go to waste. I don't care how bad you think it is. I'm telling you, we're going to get through it. You've got to be decisive. You got to take action. Opportunity is on the way for those that seize the opportunity. You can only control what you can control, so do the best you can to control it. If it's stressing you out, if it's causing you anxiety, if it's losing you money, I get it. I'm not going to ask you to be, delusional. I'm simply saying, I got news for you. You're not going to probably want to hear it, but no one's coming to save you. A government check's not going to do it. You're going to need to optimize. You're going to take the government check. It's going to help you get through a gap. You're going to seize the moment now. You're going to optimize your life. You're going to capitalize on what's coming. You're going to stop thinking and start doing it. You're going to invest in yourself and build relationships. You're going to do it now during the most unprecedented phase, maybe in your lifetime. You're not going to allow it to beat you. You're not going to let the opportunity pass you by, and you're not going to try to do it alone. You do, I'm telling you, for having to do it or trying to do it alone most of my life, that it's not right. Let's do it together, because you can get to where you're trying to go so much quicker with others. And 1 + 1 at minimum can be 3. And I like to think of the numbers 1 and 1 as equaling 11. And I'm not trying to be flippant here. I'm telling you that if you're interested in being a part of taking the economy and making it yours, I think you can do it. And I know it's possible because I've done it many times. Scott, Brent, Rob, Gene, these guys have all done it. Follow their lead. You don't have to figure it out yourself. You can cheat off them. So as I said at the outset, I don't want to get any emails and I don't want to get any phone calls. And please don't slam Kathy by tracking me down like the dog I am and trying to figure out. Just this time, Rob and I spoke and we thought enough ahead of time to create a page where if you're interested in this, if you want to comment on this, either tell Rob or tell me, but you're welcome to submit information by going to accessinsidergroup.com. That happens to be the Access Insider Group that Rob is a part of. but access isn't going to be available to you. What we've simply set up is a page called EXP that will allow you to at least comment or ask a question or whatever else you want to do. And we've asked for some basic information so we can understand how serious you are or whether you're just curious. So just click the button after you've completed the page. And then if you're interested, we'll invite you to future webinars. But I'm not going to spam people and send emails out to people who aren't interested. It doesn't serve me and it doesn't serve you. So that's it. I want to thank everybody who listened in today. I want to certainly thank my buddies who are on the call with me here. And I want you to have a great life. And today is the opportunity to start. All right, fellas, I guess I'm done.
Wow.
Nailed it.
Wow.
Very good.
Beautiful.
I was
Man.
sitting here wishing my family had watched this. Like, why is my wife and adult children not watching what I just saw? But we'll make them watch the replay.
That's what I wrote down. And Dave, I'll tell you this, telling them to ask for help, it's the hardest thing in our society to do. It's not innate to ask for help. And realtors, let's face it, we're independent contractors. We're tough folks. I mean, these guys are not employees. I mean, I love realtors because you guys, I can do it. I can do it myself. I can do it myself. No, we're here to help you. If there's anything you take from that, please get on these calls with us. You can call me individually. You can text me individually and I'll get right back to you. Because I'm telling you, agents don't ask for help.
Well, Gene, to that point, I want to share something that you've shared with me. And when you go back and look at 2008, and you look at the number of realtors who decided to get out of the market because the market was tough on them. Well, here's an idea, get over it. Because life is not going to be bliss all the time. So it's times like now where you have to unite. If you want to try to get through it yourself, you have a much higher likelihood of being unprofitable and unsuccessful. This is not the time to put your head in the sand. It's not the time to not reach out for help. And you're right. Look, we are all guilty. All of us A-types are guilty of it. I didn't want to be beholden to anyone else. I thought I knew it all, or I thought I could figure it out, or what. Get over it. This is the time to seize the moment and get other people in bed. Well, I don't want that to be politically incorrect, but to join with others to get to where you're trying to go quicker. That's what I believe.
That's beautiful. You know, it really hit me this week, Dave, you know, that I was talking to a real estate agent in Houston, Texas, and she was just, you know, this whole idea of working virtually, she couldn't wrap her head around it because she's so used to going into an office and seeing a broker and having those same people. And it just struck me that, man, how limiting is that? And now we have this opportunity where we're connecting like this around the world to be able to open up your sphere of influence and in so many different ways. And if you're not reaching out right now, shame on you, because everyone is doing this now. And so you're getting collaboration from minds all over the world that are coming together in this collective thought. Not only is this virus going to change the world, I believe the way we're communicating together is going to change the world and impact it in even a better way, because we're going to learn how to build things faster and better, because we're all reaching out right now and connecting in a different way. And so, man, you have added so much value to my life in the little time I've known you, and meeting one of your sons. You know, I was just blown away. You inspired me just to see the way the two of you interact and what you've done. So thanks again for being here today. It's a true pleasure. We appreciate you.
Yeah.
So guys, we are coming to the end of another Saturday show. You know, our goal, right, is just to add as much value as we can every week to our community.
Wait. Let me try this. Hold on. Sorry about that. I don't have a mic. Wow. Thank you, Dave.
That was good.
That was.
Hey, Dave.
I don't have to go to Harvard. Thank you.
If I may, Dave, if I may, a lot of us here, we're in a fortunate situation where we have the capital, we can pivot, we can take massive action. I know there's a lot of people working here right now watching, like 80% probably like, I don't have the capital, but I think they could still pivot. I think they could take massive action by lowering their overhead, and then make hay while the sun is shining. Some would say the sun is not shining, but I say it is. I'm definitely, you can make money right now. There may come a time in 6 months, a year or two, that the sun is not shining. So what would you say to someone out there who's watching this going, that's great, those guys have money, they can capitalize on the opportunity, volatility equals opportunity. What about the guy or the gal who's watching this, who's going, man, I'm don't have money to pay, I'm hurting. What is the message for them? Just take massive action, build up capital, lower your overhead. I mean, what any thoughts there? Just being real.
Yeah, look, it's easy for me to be real. I spent the first 20% of my life and I didn't have a pot to piss in or a window to throw it out of. So I know what it's like not to have anything, and for 20% of my life. And now, I mean, I literally have everything. And I'm not trying to be pretentious. I'm not trying to sound like I know it all or I'm just great. It's just that I have fashioned my life to succeed. It's not about worrying about what I don't have. It's worrying about what I do, or thinking about what I do have. So there are three types of resources if you think about it. One is financial, one is strategic, and one is human. So maybe you don't have the financial resources that you'd like to have right now. Guess what? It is what it is. I started with zero. Rounded to the nearest zero, I had zero. So bottom line is, some of you find yourself in that position. So you don't have the financial resources. Do you have the strategic resources? What do I mean by that? EXP. It's a strategy for generating what I think Gene said was four streams of income potentially, or at least 4 ways to be able to generate income or accumulate wealth. So you got 4 strategies. Okay. And what else do you need? Human resources. You got the guys on the call here who are willing to take your calls. People always ask me, people don't reach out to me often because they think I'm too successful or that I'm not approachable or whatever. And the guys here have just told you how approachable they are and that they want you to reach out. Your upline, your downline, you got people in your community who are your support system. And you know what? Somebody's got an answer. So whenever you find an answer, it comes in the form of a person or an idea. But neither of those mean anything if you don't capitalize, if you don't execute on a relationship or on an idea. Otherwise, you're exactly where you started. And so I don't know if that helps you. I just know that having started with nothing, having had to survive, and some of you are having to do it now, it's okay. Because whatever doesn't kill you is going to make you stronger. You just got to capitalize on those other 3 things. And I just believe that. I'm not telling you what I think you want to hear because that doesn't serve you or me. I wish somebody would have told me that and I wouldn't have stayed in a trailer park for 20% of my life. But, I'll say one other thing because I want to inspire you, but I'm not a motivational speaker. I'm just a guy. But I will tell you this. My mom was one of 10 kids. My dad was one of 4. Those 14 siblings had 60 children. And I was the only one to go to college. Now, I was the only one to get here. Now, it's not easy. So it depends upon how important it is to you to be successful. Because if you want to be mediocre, that's easy. If you want to be successful, you got to do something different. And one other stat, and then I promise I'll be quiet. But one other stat that's really important for you to understand is the Social Security Administration does research every year through census surveys. And they look at people who are going to reach the age of 65. When people are supposed to reach the age of 65, 38% never get there because they die. 53% of them die dead broke. That's 91% of people in America. Is that you? If it's not, you're in the other 9%. That's like the tall cotton, right? You're in pretty good shape. Now, it's a matter of being grateful, but not content. Because if you're okay being mediocre, I'm wasting oxygen and I don't have a lot left because of my age. But I'm telling you, if you listen to this and you do something about it, it'll literally change your life because you got a support system of people who are willing to help you I didn't have. I had to figure it out on my own. I spent most of my life trying to do it on my own because I didn't want to be beholden on others, and I thought I'd figure it out. And all. Finally, I collaborated with other people, and I added 2 zeros to my net worth. That changed my life. So that was a long-winded answer, Brent, to your question. I'm sorry, bud.
Thank you. Thank you.
That's one.
I have a quick question for you, Dave. You said one of 60, and that just made me think, wow, there had to be something that really drove you. I mean, something that inside of you that was burning, saying, I've got to get out of this. Do you mind sharing with the crowd what that was?
Yeah, no, I don't mind at all. And I don't know if anyone asked me this in Mexico or not. So this will be new probably to all of you, but you already heard where I grew up. And my dad was an iron worker, and my parents had 8th grade educations, and they met when my wife or my mother was a waitress. And my dad was an iron worker, fell off the 5th floor of the Sears Tower when it was being constructed. He obviously lived, but he was out of work for 22 months. Now, my dad, in case you haven't figured it out by my last name, it's German. My dad was the oldest school German you've ever met. If he had the flu, he went to work, because that's what you did. You worked until you dropped. And my dad worked until he was 70 as an iron worker. So when we were in that trailer and he fell off the 5th floor of the Sears Tower for 22 months, there were no handouts. You think you got it tough now, folks on this call? There were no handouts. There really weren't any hand-ups. You think about all the immigrants who came to our country over 250 years ago. They didn't get a welcome package when they got off at Ellis Island. So why am I telling all of you this? It's so important to understand that when I was there, all I could think about was being 2 things: a millionaire and a great dad. I wanted to be a great dad, not just a biological father. That's easy, and that's the most fun part. But being a great dad, it takes a lifetime commitment. Being a millionaire, and I had no idea what the hell that was. All I know is it beat the hell out of eating mayonnaise sandwiches. That's what I wanted, and that was my why, and that drove me. I was going to be a millionaire, and I was going to be a great dad. So when my kids were born, I gave up corporate life and moved to San Diego and had quality of life, walked them to school both ways every day, coached 30 or 40 of their teams, drove them to high school or to middle school every day. And at the end of the day, I created a community of my sons and I that keep coming back together to build businesses. We have 2 new businesses built in the last 9 months. They're both 7-figure businesses, multi-million-dollar business in 9 months. What I'm going to tell you is once you learn how to turn on the money faucet, you'll always be able to turn it on, because it gives you the confidence to know what you need to do when somebody tells you you can't do it. Sorry, Scott, long answer, but there it is.
That's awesome. Awesome. Any final thoughts, guys? Any last questions for Dave?
I just think that the people on this call, the people that show up that are learning, going to be learned. My last thought is just be one of the 9%. That's all I'm going to say. I mean, everything's statistics, but when you get to 65 and you, by the way, Robbie, I'm not talking to you, but I'm talking to a few of us. I turned 65 this year.
Youngster,
I'm having more fun this year than I've ever had. If that makes sense to everybody. And my goal is, of course, to be a great dad, granddad, father, husband, but also just to have fun. I mean, why does everybody think they have to work to a certain thing and make so much money and then they go off and they sit by a pond? Robbie, aren't you having more fun? I mean, I'm having more fun this week helping people see through what's going to happen, because it is going to happen. I am a realist. I'm an optimist at heart, baby, because I got news for you. You just don't want to be the 400,000 realtors that are going to go bye-bye in 3 years. Why do I know that? Because I have my stats. I'm like you. I'm an ex-bean counter. So I know how many people are going to go bye-bye. Guess what? Get the referrals from them when they're running out the door. Tell them I'll take your client list. I'm being this realistic to you. Everybody thinks this is hard. When you see all the realtors in your office running, going, I'm going to go back and do whatever, you go, no, no, no. Give me your past client list. I'll take care of them. I'll pay you a referral fee. In fact, I'll pay you a referral fee on every single one of them because I'm going to be here. You really have to have that. I don't know what drives everybody. Everything, we all have our whys. Here's the thing, what I'm going to tell all of you on this call. There is no reason you can't be in the 9%.
That's right.
And Gene, I'll tell you this. I didn't finish the 9%, but of that 9%, there's roughly 4 to 5% that are financially secure. There are 2 to 3% that are financially independent. So they're not relying on anyone else to get through the rest of their life. 1% who are wealthy. There are 1% of people who really have figured this thing out and have collaborated with others to get there. And once they get there, as you saw from some of the statistics, which is why I thought it was important, not just for those of you who are 1%ers, but those of you who are 4%ers or 10%ers, or got to get to there some point. I mean, don't you have an obligation, if not to yourself, to your family? And that's why I've not ever I've early retired 3 times, and I finally realized I suck at it. And I finally got to the point where my son, when I was going to retire 3 years ago again and try it again, he said, Pops, you got to get over it. There's no way you're going to retire. You love what you do. You love who you do it with. And why would you not? He said, what you ought to do is rewire, not retire. And I almost fell off my chair. So right now we happen to have, and because this is being recorded, I won't share the number, but a significant passive recurring income stream or streams, lots of streams of income. So I don't have to be on this call, but I'm here because I want to be. I'm here because I get to matter. I'm here because I get to do good, not just make money. I'm here because for me, this is fun. I'm like a junkie for this stuff. Pathetic, I know, but I am. So I think it's a great opportunity for all of you to find what you love. And if it's real estate, it is a great vehicle to find the people you love to do it with, whether it's family, which is what I was suggesting you consider, or your extended family through EXP. And just make as much money as you can, do as much good as you can, have as much fun, because the more of that you do, success begets success, and the more of it you become. So I don't know. I get excited about this. So I know this was supposed to be like a 30 or 40-minute call. So
Your calls.
Thank you. Thank you. Thank you.
Fantastic. Brent, any last thoughts from you?
I'm so glad you asked. I was dying. I'm like, don't say anything. I will say this. I want to talk to those of you out there right now that are just, you heard all this and you're still going, but that's not me. I'm not Rob Flick. I'm not Dave Stech. I'm not Scott, Gene. I'm not whoever, Jay Nelson, Jeff Willems. I'm scared. I'm paralyzed. I'm freaked out. I have a quote for you, 2 of them. 1, I felt sorry for myself because I had no shoes until I met a man who had no feet. Listen to me. Someone somewhere has it tougher than you. My pastor's dad came from Italy and did shoe shine boy on the docks in New York. Became a United States Senator from New York and a Supreme Court Justice in New York's Supreme Court system. Very successful, started with nothing. You could say, I'm afraid. You could tell me why you can't do this, why you don't have enough money. But bottom line, you argue for your limitations, you get to keep them. Congratulations, you win the hard argument. You are going to live a life you don't want to live. So part of growing up is just looking at in the mirror and go, I'm going to change. If it kills me, I will change. I will read, learn, grow, hang out with, and find that gear in my life to become the person I want to be, who is loving, kind, giving. So I'm telling you, take massive action. Don't be afraid to fail. Learn from your mistakes and do something great with your life and love people along the way, wherever you are. And I'm telling you, I will see you at the top, as my good friend Zig Ziglar always says.
Yeah, Ziggy.
Zig. Miss Zig all the time. Robbie, last thoughts?
Yeah, that was one of my favorite books, See You at the Top by Zig Ziglar. In fact, I could never read that at night. You know, I'd like to read sometimes before going to bed. It kind of puts me to sleep sometimes. But when I read that book, I mean, I was bouncing off the walls, the ceiling, spouting things off, walking around. I guess I would say, you know, utilize the information that you can get. Like Dave was fantastic today, no question about it. Get that information, study it. I'm sure there's going to be replays. Watch it again and again. Take notes like what you said, Brent. I think that's really, really important to do. And then take action, you know, on something and develop yourself a plan and take action on it. Surround yourself with like I say, and Dave says, the one percenters, if at all possible, 5 or 10, wherever you can go. And I would read books that are going to improve your outlook and improve your knowledge, if at all possible. I love it when we all get together. I love the people that we're bringing in to get different perspectives and more information. I just like Dave said, I have found this. I love this. I think doing this is great. We all have a calling for it, and I appreciate every one of you. And I'm excited and honored to be in business with all of you. Thank you very much.
Thank you, Rob.
Rob, last thing I want to say for you, bud, is I appreciate you, man. Thanks for the invite here. At the end of the day, I'm grateful that you invited me to share with others. So I've always believed that recognition feeds the soul. That's why I want to thank you publicly. And it's also why I want the rest of you to thank Rob and, of course, you know, the other guys, because they didn't have to invite me. And recognition feeds the soul. So if you enjoyed today, let Rob know, let Gene know, let Scott know, let Brent know. And if you didn't like what I had to say today, let them know, because don't call me.
That's beautiful. Thank you again, Dave. And next week, guys, we were built for this. And so next week, we are going to have the Jay Kinder and Pat Hayes on this show. It's going to be powerful. It's going to be impactful. You're not going to want to miss it. It's going to be a great show. So, you know, this is fun, and doing this every Saturday to be able to give back and share is so powerful. And I think we are changing lives because we were built for this. And I want to thank every one of you. Dave, again, thank you so much for being here. We'll see you soon. And God bless everyone. Have a great weekend.
Bye.
Thanks, Scott. See you, Dave.
You guys.
Well, friends, I hope you enjoyed that show and meeting Dave Stech. And you know, you now have a much clearer vision of where things are headed over the next few months. You know what? Maybe it's time now to look at your future and see if there's something better out there for you. If you've been displaced, or maybe you're just looking for a better opportunity, let me hear from you. You know, the Cliff Freeman Group is expanding all across the Dallas-Fort Worth Metroplex, and we would love to meet quality agents like yourself. So take a minute now and just drop me a quick note. Send me an email at cliff@cliffordfreeman.com. I'd love to hear from you and talk about just how big your future could be with us. Again, I hope you enjoyed the show. We'll see you next week, and God bless.